Hi, everyone. I'm Jerry Davidsey, CEO of Presilium Private Wealth. Welcome to Financial Planning Fridays, our weekly video series on financial planning, where we work to simplify wealth management decision-making for our clients so they can focus on what is most important to them. Today, in our 22nd Financial Planning Fridays video, we wanted to discuss the best ways to maximize your retirement accounts using the new IRS limits for 2023. These are the largest contribution increases in history and will allow you to save more than you ever could before. Saving into these types of accounts are some of the best ways to make investments each year because of their many tax advantages. We created a one-page document highlighting the 2023 tax brackets, contribution limits for various retirement accounts, and the current gift and estate tax exemption amounts that you can download from our website at presiliumpw.com. While the numbers are important to know, we also identified a few ways that our clients can maximize these higher IRS limits. As many are aware, the IRS limit for salary deferrals in 2023 is $22,500 for pre-tax and Roth 401k contributions. What most people are not aware of is that many retirement plans also allow you to choose after-tax contributions alongside your pre-tax and Roth contributions. This matters because the IRS contribution limit for all contributions this year, including your employer match, is much higher at $66,000. This means that on top of a maximum contribution, one could contribute an additional $30,000 or more to their 401k, well above the basic IRA contribution limits of only $6,500. When reviewing your plan and making this decision, it's important to have a good understanding of how to allocate your contributions to each bucket, as this can impact your cash flow month to month and also throughout the year. We are happy to assist you in deciding the right percentage for each avenue available within your retirement plan to ensure that you are well positioned to achieve the maximum current and long-term tax advantages. A second area worth considering if you are eligible is a Roth IRA contribution. If so, this is a great avenue to build up what will eventually be tax-free income in retirement. If not, and your income is above the IRS threshold, you may want to consider contributing to a regular IRA instead, and then immediately converting it to a Roth IRA. Finally, and perhaps the most impactful action you can take, it is important that you contribute as much as possible, as early as possible to these tax advantage plans. And it's important that your family members and friends do too. Only 41% of Americans contribute to a 401k, according to the US Census Bureau. And because most people no longer have access to a pension, 401ks are often the only retirement vehicle that we have access to, making the savings we do into these types of tax advantage accounts more important than ever. And when it comes to these accounts, it's all about getting started. The earlier, the better. A 30-year-old today who is able to save the maximum pre-tax or Roth contribution each year to their 401k with no company match and have it grow at 10% per year will have more than $9 million at age 65. If they instead begin their 401k at age 40, they would have about half that. And if they wait until age 50, they would only have a quarter of that. This can truly have an outsized impact on one's financial future. This chart shows a 30-year-old making the maximum 401k contribution of $22,500 each year until they turn 65. If those funds grow at 10% per year, they'll be worth more than $9 million. And if they save them inside of a Roth 401k, that $9 million will be completely tax-free in their retirement. Please forward this to a friend or family member to show them the impact that beginning to save earlier can have for them. It will really pay off in their future. In our last video, we also went over a few of the reasons that we are so optimistic for a market recovery this year. One of the best ways to take full advantage of a down market and more completely participate in the rebound is to maximize the contributions in your retirement accounts. Please feel free to call or email us if we can help in any way. Thank you, and we hope that 2023 is your best year yet.